to Startuprad.io, your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Welcome everybody, this is Joe from Startuprad.io, your startup podcast and YouTube blog from Germany. If you're listening to this at Startuprad.io or Blockchain Germany by Startuprad.io, make sure you also pay a visit to our YouTube blog, youtube.com/Startuprad.io, to see the YouTube interview. This time I'm talking to two people, co-founder of a blockchain startup. As I was researching, I bumped again into the, let's say, unsavory business behavior of some other people. That's why I just added this disclaimer. As opposed to the usual YouTuber or podcaster in the blockchain space, you don't pay thousands of euros to be here, meaning my two guests, and neither am I invested in you or do I get any feedback. For everyone who's surprised about that, many channels work like this. Just pay attention to the people in Telegram chats who asks admins for emails and business proposals. They usually send an offer with a price tag of several thousand euros, sometimes upwards of 50,000 euros, just to be on their channel. And before I forget, they usually only want cash, they don't take crypto. Make sure you vet your blockchain information sources before you fall in those traps. That said, today I do have two co-founders of a blockchain startup from lovely Darmstadt here with us, and we may add that at the point we are recording this, you guys have not actually legally founded your startup, right guys?
Yeah, that's correct. We're still a university research project at the moment.
Okay, I see. Can you guys introduce yourself a little bit?
Yeah, sure. So welcome everybody. My name is Sebastian Stammler. I'm one of the co-founders of Perun. And I started studying mathematics in Darmstadt about 10 years ago, even more than 10 years ago. I was one of the last to do the diploma. While I was studying mathematics, I was rather doing number theory and more theoretical stuff, but I always loved to also work with computers. So from an early age of 11, I started programming, and I bought my first SUSE Linux distribution in the Phobos computer store, and was annoying the telephone hotline of SUSE Linux for installation instructions, because an 11-year-old Sebastian didn't know what partitions are. And then after I studied mathematics, I actually went into the industry, worked as a financial quant, so as a quantitative finance analyst at Ernst & Young. And then I actually missed working in smaller teams, so I wanted to have more of a startup spirit, and I also wanted to work even closer with computer science. So I joined a rather medium-sized startup in Darmstadt, working with integration software. And then after a year, I decided that I actually miss research. So I joined TU Darmstadt again to do a PhD in computer science. So since 4 years, I'm doing a PhD in applied cryptography, especially in anonymization techniques and secure multi-party computation. And then about a year ago, I met Sebastian Faust. He's a professor at TU Darmstadt, together with a few of his colleagues, for example, Lisa Ekai. And they work on blockchain protocols, especially scaling solutions like payment channels and state channels. And when I met them, I was very excited to hear that we actually have a research group doing blockchain at TU Darmstadt. So we quickly came together, and I joined the team. And we will later explain you exactly what the team is exactly, what is the relationship to the university, and how the project functions. And and one last thing I forgot to mention is that about 2 years ago, I already founded a blockchain startup with which I went to Tel Aviv to join the startup accelerator for 3 months. And this didn't work out fully, but it was I had a great time. I learned a lot. It was a great experience. And now I'm even more excited to do startups. And this is why I'm with Perun again. And now I'm going to go to Hendrik.
Yeah. Hi, my name is Hendrik Amler. I'm also one of the co-founders of Perun. And I've joined Perun about 6 months ago. And it's kind of a funny story. because I have a background in masters in IT security. I did a master's in IT security. And at the time, I was working at a startup doing KYC, also founded here in Darmstadt. And while I was doing my master thesis, also at the research group of Professor Sebastian Faust, so I learned that he moved from the Ruhr-Universität of Bochum to Darmstadt, and I was like, oh, cool. Like one blockchain researcher, I have to write my thesis with this professor. So I went to his first lecture, showed him my proposal, and he was like, "Yeah, sure, let's do this." So I did my master thesis here at university, and he coincidentally put me in the office with Sebastian Stammler and Marius, also one of the co-founders, and then they kind of like sucked me into the Perun world of state channels. And I thought it was really, really exciting. I mean, this was my first interaction with blockchain because I've been into this space since 2013. So I started mining and started like writing some small programs and trading and like the whole thing. I think everyone in the blockchain space does. And this is kind of my story. And I have a background in infrastructure, so I've been working in data centers, and we at Perun also have like our own little cluster that's blinking and stuff. So we actually moved there in the summer because it was so hot and there's no air conditioning, so we moved to the server room. So we we enjoyed some cool temperatures when it was like 40 degrees here in Germany. Yeah.
I may add a little bit background to what you guys are saying, just for the simple reason that more than 75% of our listeners are actually listening to this podcast outside of Germany. At first, we want to tell Phobis used to be a retail store chain here in Germany that was actually blockbustered. It was also the place where I got my first personal computer. I would add number 2. Diplom is a degree that used to be awarded here in Germany. It's between a master's and a bachelor's, but usually in the level of difficulty it usually is a master's. And then finally, buildings in Germany usually don't have ACs, but apparently we're now getting summers that actually do need it. I can see the guys on the other channel are already smiling. So can you tell us a little bit about how your idea developed and what market are you actually working on with your future startup?
Yes. So what we're building is infrastructure software. So our products are scalability solutions. So very general concept scalability solutions to blockchain. So our market really is focused on anyone applying blockchain technology. So at the moment, we see many companies, many consortia doing proof of concepts with blockchain. But as soon as they hit production, they, like most applications, actually will see scalability problems. And this is where our product will come in.
Yeah, so maybe some more background on this. So the scalability issue means that public blockchains or such as Ethereum and Bitcoin right now can only do 10 transactions per second. And if you wanted to put 1% of the global financial market on the blockchain, you would have to do more than like tens of thousands of transactions. And this is where we come in. So we're targeting right now larger companies, more than 500 employees, that are already working with blockchain or are thinking about it, but most recent reports show that they fear security, and the second thing they fear is the scalability issue that I just talked about. So we hit both of these targets because our protocols that we developed here at TU Darmstadt are actually provable secure. So that means that on a protocol level, there can be no more security issues. And this is one major USP of us that we can fulfill. So,
we always try to make this podcast so everybody can understand it without any background. From my understanding, basically, blockchain is a decentralized database that actually gets bigger, so to say, longer with every transaction, and that's where the scalability issue comes from, right?
Yeah, exactly. Yeah, sorry, we didn't give any background on blockchain yet. Yeah, we're sorry for that. So yeah, blockchain, to sound less sexy, is just an append-only decentralized database. So the database is modified by transactions. So every time you want to modify, for example, the balance of people in the blockchain network, you send a transaction, and this transaction gets appended, and several transactions are grouped into blocks, and then blocks form the blockchain. So every block, so you basically what's happening is that that entities called miners are aggregating transactions into blocks, and then they try to solve a mathematical puzzle in the case of proof of work blockchains. And then they also have a pointer back to the prior block, and then when the mining process is successful, this block gets introduced into the blockchain network and is broadcast. So at the core, blockchain is really just a solution to how do you decentralize a database and have a common view, like a world view on the state of the database. And you have several algorithms to find consensus. Those are called consensus algorithms or consensus mechanisms, like proof of work. This is the famous proof of work that Satoshi Nakamoto introduced with Bitcoin. How do you actually find a common ground, a common view of the database? And this is what blockchain really is. But because you have to distribute those transactions and the state of the network through the whole network, you very quickly hit scalability problems, scalability boundaries, and this is where our technology comes in.
Whew, okay, let's try to relate it a little bit to things everybody can understand. So what is usually the security concerns? Because at the beginning there have been many exchanges, Bitcoin exchanges especially, that got hacked and completely robbed. So I do believe that's where one of the security issues is actually coming from. Are you actually helping with this?
No, actually, we kind of depend on the security of the underlying blockchain. So what we're doing is basically, usually you have to, when you send a transaction in a blockchain, it has to be confirmed by thousands of parties in this decentralized network. And this takes some time. In Bitcoin, it takes like 60 minutes until one of those transactions is confirmed. And this is the reason why there is this limit of 10 transactions per second, because everything has to be distributed and it takes a while and confirmed. And so what we're doing is improving this by creating sort of a second layer above this basic blockchain layer. So we kind of depend on the security of the blockchain layer. But
yeah, I might add to that, for example, in the case of hacked exchanges, usually you don't have a security flaw in the blockchain itself. So it's not a problem with the consensus protocol or with the blockchain. For example, in the case of Mt. Gox, right? I mean, I think this was probably the most famous case of a exchange being hacked. At no point was really the blockchain, like the Bitcoin blockchain, wasn't really hacked, but it was actually the SecOps of Mt. Gox that were faulty. I mean, they actually claim that there was a problem called malleability. So transaction malleability is just like a technical term, but it also isn't really a like a security hole in the blockchain in the Bitcoin model, but it was really a hole in the security operational security of Mt. Gox. So we are not providing security for blockchain, like let's say an extra layer of security or something for companies like exchanges, but rather we're building something new on top of blockchain. So we do rely on the security of the underlying blockchain that is being used.
Okay, and can you explain, like for people like me without a computer science background, can you explain what you're building on top of this blockchain?
Yeah, so basically, like I said, you don't send transactions within the first layer of the blockchain. So not thousands of people are confirming this, but the idea is that we can send transactions peer-to-peer. So for example, if Sebastian and I want to do a transaction, I don't send it directly to the blockchain where it's confirmed by thousands of people, but I send it to him directly. And most people then say, well, how is this secure? Because you're kind of bypassing the whole blockchain. And the idea is that we do both one transaction on the blockchain, this is the first transaction, and then we open a direct channel between the two of us. And once this channel is established, we can send immediate transactions, like thousands of immediate transactions, doesn't matter how many. And once we decide that we are finalized, we can close this channel, which is also on the blockchain. And when we kind of disagree on something, so I say, well, I sent you something, and Sebastian say, well, no, you didn't, then at any point in time, we both can put this channel that we opened on the blockchain. So we both get our fair share. And on the blockchain, there's something called the adjudicator, who kind of decides, based on a predefined set of rules, who actually gets what amount of money. And we have proofs that we send between each other. So I send him like a signature, and then it's kind of finalized. So he can be sure that he will get the money once I send him like a confirmation that I sent one coin.
Yeah, so just to add to that, so the whole idea of going off-chain, of doing a second layer on the blockchain, is that instead of having every single transaction confirmed by the whole network, you block a certain amount. So this is like we both enter a contract, and within this contract, so I really thinking in terms of legal contracts, we might lock up some money, and the contract says, okay, we deposit, say, 10,000 euros in a bank account, and the contract says this is now locked, and we can between each other with cryptographic means can work with those 10,000 euros, and then we can send each other cryptographically signed transactions that modify how those money is distributed between each other. And then only in the dispute case do we go to like a judge, to a court, and this is where the blockchain will only act as a judge. So the whole idea of second layer is really that instead of having every single transaction, every modification, so to speak, of the blockchain database having completely being confirmed and checked by the whole network, you lock up some assets like Ether or like Bitcoin, and then you can work with those locked assets in the two-party channel, because the two parties or end parties can now agree how this is distributed. So this is like it works in the real world, right? So if we both enter a legal contract, not every time we do some kind of company interaction do we go to a judge. So the only time when we go to a judge or to a court is when we have a dispute, because then we will get to our lawyers and we will read the contracts, and then we both discuss with the court, and then the court decides what was right or wrong and who actually won the dispute. And this is exactly how the blockchain is used in our case. So instead of having every single transaction being confirmed, this would be like every time you do a transaction or some interaction with a company in the real world, every time you go to a judge. But you don't really need to do that, right? You only really need to go to a judge if there's a dispute. And this is exactly what second layer technologies do.
I see. I now understand, like opening a separate channel between you guys, and we are more of a B2B channel, so a lot of our audience is entrepreneurs, is founders, is people on a C-level. So can you give them some ideas how they could actually work with such a concept, how you could integrate it into software, into processes, stuff like that?
Yeah, sure. So the first thing we're building right now is an SDK, so a software development kit that we want to release open source by the end of December, that can be used to integrate our technology that we just described as second layer off-chain technology into existing blockchain systems. So these developers can use our technology kind of as a library that you can add to a software, and then they can utilize our functionality, if that's easy enough to understand.
So yeah, so like we said before, our main target are really people who are already using blockchain. So if you have like a consortium with your company has a group of other companies, and you have a Hyperledger Fabric instance, for example, running. So Hyperledger is one of those proof of authority blockchains that is being used for consortium blockchains right now. And then people could use those channels to drastically increase the scalability and also the finality requirements on transactions. So yeah, like in the business to business context, this is actually perfectly usable software to increase scalability and also the finality of a transaction.
Oh, yeah, and we're currently working with Bosch and Telekom here in Germany to develop cool proof of concepts. So this is right now mainly IoT, so kind of machine-to-machine communication. So we're working on this use case where we have a factory where not only Bosch is involved, but other parties within that building. So the idea here is that they don't really trust each other, and they kind of want... Or you have a decentralized marketplace where you can kind of order specific things. So one guy offers to cut metal, another guy offers a robot who can move things from A to B, and you have kind of this marketplace. And then I can say, okay, I want the Bosch robot to move something from A to B, and kind of have an assembly line between different parties within that building. So it's all machine-to-machine communication, IoT. So this is kind of this is what I can talk about. So we're doing some more stuff, but this is a project we're doing right now with Bosch. That's really exciting, I think.
And Bosch actually 1.5 years ago already started cooperating with a research group of Sebastian Faust, and they also have their team internally implementing our protocols. So they have a payment channel proof of concept already running. And I think also one of the first examples that they have is like a drill, right? That you can pay with. So they are currently building. They already have it's like a smart drill, so to speak, and you can then pay the drill with tokens, and then it just spins like the amount of tokens that you pay it. And this is just to highlight on what such a granular level you can now do. The transfer of like payment transfers. And this is one of the great things about channels, that you can really do microtransactions on a scale that is not imaginable before. So in theory, you could actually also use this channel technology for centralized financial networks. So for example, the Visa network or even the PayPal payment network could also introduce our channel technology to have direct peer-to-peer or even machine-to-machine payments without going over the server. So also like in the Visa case, it would look like this. Both parties agree to lock up some funds, and this would then be locked up with a central Visa server. And then after the Visa server has recorded this funds being locked on their server, then two devices could directly exchange cryptographic signatures to send microtransactions. And we're really talking about could be at thousands of a cent that is being sent every second to pay for some service. And this is also possible with channel technology. So in an abstract sense, channel technology doesn't even depend on a blockchain network as the transaction network, but it could also be a centralized network like Visa or PayPal. But currently, we are, of course, working with Ethereum as the first backend, because this is also where the whole research and theory comes from. But just to make sure that the technology could even be used in centralized transaction networks.
Yeah, so for example, we also have use cases such as streaming video. So if you stream a video, you don't have to pay for the whole movie. So if you 20 minutes into the movie, you realize, oh, it's so boring, I don't want to really watch it anymore, then you only have to pay for those 20 minutes. And we can do this like on a granular level. You can pay for each 5 seconds or even every second. It's all within the realm of possibility.
I was wondering, when I've been listening to you guys, just personally, I do have a fintech background, a finance background, working lots with technology. You've been talking like 10 transactions per second, if I do remember correctly, on Bitcoin. How fast could you scale? How big could you scale with your payment channel technology as in terms of transaction per second?
So the theoretical limit really is thousands of transactions per second, because in a channel, the only two parties that are involved in those transactions are actually the two parties in the channel. And the only thing, like on a technical level, a transaction is nothing else but a cryptographic signature on some chunk of data. So really the throughput is really just hindered by, let's say, the network latency, the network throughput, and the speed by which your CPU can produce cryptographic signatures. And I mean, right now, you can easily generate, I think, 10,000 cryptographic, like elliptic curve cryptographic signatures. This is what's being used in Ethereum. You could easily create 10,000 of those signatures in a second on a modern hardware, and then probably your bottleneck is actually going to be the network latency, network throughput. So this is really what limits the technology, like the very bare network throughput and CPU throughput.
I see. And with the right hardware, you can even get faster than 10,000 times?
I guess if you have like a very strong network connection, like a 10 or 100 gigabit per second network connection, I guess you could even do that. But then the question comes up where you need so many in a single channel, because this is very important to note. We're not talking about transaction throughput of the whole network, but between only two people, right? Because in our channels, you basically have a fixed amount of people. I mean, usually in a payment channel, 2 people, and then within that channel, you can transact as many transactions as possible. So if you think about the whole network, it scales even way higher, right? Because it's really only between 2 people where you can reach, say, 10,000 transactions per second. But in the whole network, it can be even like more. Like you can multiply it by the number of channels.
I see. And the next question is, of course, is there a theoretical or practical limit on the number of channels you can have?
I mean, so the thing is, channels itself become impractical if when we're talking about ledger channels is what is directly being funded by the blockchain or by the network. Then I mean it really is just so there are no theoretical limits really. I mean basically everyone could open a channel with everyone else, but then you have a practical let's say you have a usability limit because you have to lock up funds. And imagine you have like 1,000 customers and you have to lock up funds with each customer, then you actually have a liquidity problem because you don't have enough funds to lock up. So I think they're not really theoretical limits on the let's say theory of it, on the technology, but it's rather a liquidity problem which you run when you work with channels.
I see. And are you also working with some models like trustees or something that actually those can a little bit work with the money so that you don't have to commit like 100% but only like margins like you do in terms of Eurex transactions, derivatives?
Yeah, very, very good question, because we're actually having active research right now. So maybe this is a good point to give a bit of background on the whole project, because as we said before, right now the company is not founded yet, but it is still a research project within the Technical University Darmstadt, also in cooperation with the University of Warsaw. And the 2 professors, Sebastian Faust and Stefan Jambowski, those are the co-inventors of the whole Perun protocols. And they have several PhDs working on all kinds of new technology and protocols that concern off-chain solutions for blockchains, like payment channels, state channels, and also something completely else like plasma chains, which are called commit chains. But I'm not going to go into details here yet. So I'm just giving this background to say that right now Perun is a huge group of researchers doing active research in many fields, and one of the fields we are doing research in right now is really having only partially funded, partially collateralized channels to build channel networks, because this is actually one of the when it gets really interesting, our technology, because you can have 2 people having a channel funded by the blockchain, and then you can build complete networks with those channels. This is also what Lightning on Bitcoin is doing. So maybe one of the listeners are familiar with a Bitcoin Lightning network. And the Bitcoin Lightning Network is the most prominent and biggest payment channel network. So our technology is exactly doing this, but what we are doing is on a more general level, because we not only can run payments in those channels, but actually completely run smart contracts in those channels. So this is why it is a strict generalization of Bitcoin-style payment channels. But for other blockchains like Ethereum or Hyperledger. And so, yes, we are currently researching and thinking about how we could build complete channel networks where you could think about hubs in the middle, like partially trusted or known hubs that don't have to have full collateral, but only partial collateral.
I see. That's usually what you do in derivatives clearing facilities in the financial market. Sorry,
No, I was going to say this is kind of how the banking system works right now as well. So you have like huge hubs, those are the banks, and they have like a more or less trusted network between them. So they say, I owe you some money, you owe me some money, and then they balance this somehow.
And exactly this kind of topology and situation is what we're currently researching to also reflect that in channel networks. Because right now, if you look at the Lightning Network, if you also look at the current state of payment and state channels on Ethereum, you will only see fully collateralized channels, which is fine if you have two parties that are completely not trusting each other, right? Then it just makes sense to have it fully collateralized because there's nothing to be lost. But if you really think about big hub networks, then it really makes sense to work with those with trust here, to have some element of trust between the hubs.
Yeah, so the initial thinking behind the Lightning Network was we are going to have this huge decentralized payment channel network, and everyone can transact freely with one another. We don't need any hubs or trusted parties. But then a while later, they figured out, well, this doesn't really work because the routing is an issue. So if I want to route something to a different person, so a transaction, this takes some time to compute. Actually, right now the network has 10,000 nodes, I think, and sometimes you run into issues where actually finding a path to the recipient of the money takes like 10 minutes or something like this. So then now they're going back to this hub topology where you kind of like in the internet, your router connects to a provider, and then this provider connects you to all the others. And because it would be infeasible for the internet to be fully decentralized, because it wouldn't be there wouldn't be much performance. You would have to wait like a few minutes to open a web page, probably.
I see. And everybody can tell we are touching on very cutting edge technology and forward-looking stuff here. Everybody who'd like to learn more, go down here in the show notes. There is a link to the LinkedIn profiles of the two guys I've been just talking with, as well as to the website of Perun Networks. And I hope you guys also give me the link to all the research you've just quoted, and I'll also put it in the show notes wherever you're watching this video or listening to the audio track. Go down here in the show notes. There's a link to our website Startuprad.io, and then a little bit text. That's our blog, and the specific blog where you can find all the show note links. Hendrik, Sebastian, it was just a pleasure having you here. Thank you very much.
Yeah, thanks a lot. It was really a great pleasure talking to you, and I hope we could really give you an insight about the current state of off-chain networks, state channel networks. And if you build a blockchain network and you hit scalability problems, call us.
Yeah, thank you so much for the interview. If you're interested in our technology, you can just reach out to us, and we're looking forward to your feedback.
Thank you very much. It was my pleasure. Bye, guys. Bye-bye.
Bye-bye.
That's all, folks. Find more news, streams, events, and interviews at www.startuprad.io. Remember, sharing is caring.